Good morning, everyone. Welcome to binary.com. I'm stumbling over the first few words already. Thank you so much for joining. Today is the 30th of June, which means basically it's the end of the month, or today is the last day of the second quarter as well, plus the first day of the week. So things are a bit unusual with this combination. Be careful and cautious because this does have an influence on the market. The movements could be slower, could be more spikier, for instance. All of that could happen. It's just an environment to be cautious of. Why is that? Because, well, if you're a hedge fund, for instance, you might be looking to book some profit either last Friday or this Monday to show it to your investors, for instance. So this can cause retraces. This can cause trends maybe to stop, etc. So something to be aware of at the very minimum. We can take a look at what June will probably look like. Of course, we don't know exactly because today it could change the character of the entire month, but it'll be interesting to see what will happen, what happened in June and what will happen in July. Before we discuss that, though, first of all, this PowerPoint. Once again, binary.com. My name is Chris, and trading for exchange and global financial markets is considered high risk. It may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. So the risk disclaimer, very important, explaining the risks involved. And by continuing watching this webinar, you agree with the risk disclaimer here and the content of it and the terms and conditions mentioned on binary.com. Good. Thank you for your attention. As always, you can look again at this webinar, or maybe the first time, by registering with your name and email at blog.binary.com/weeklytradingroom, and you'll get access to that when it's ready, usually a couple of hours from now after the live session. Today's goal, as always, we're going to take a look at the economic calendar. We're going to take a look at the euro dollar, pound dollar, dollar yen, AUD USD, and XAU USD as well. There we have it. We got GDP on the CAD. We have some lighter news on China, USD, and the euro for Monday, the 30th. Also be aware, though, that's the last day of the second quarter, as I already explained earlier. Tuesday, we got a bank holiday in CAD. We got Aussie cash rate. That's very, very important to know. Aussie could have a substantial impact because of that. Be careful of that. Let's see. Wednesday, we have Aussie news as well, plus USD ADP. Thursday we have euro and pound. No, not pound. We got euro minimum bid rate. Usually those are actually the same day. But today, this week there's an exception. Plus we have NFP figures on Thursday. So that's a big day Thursday because Friday there's a bank holiday in the US. That's why the NFP figures are one day earlier. So it's a difficult week because Friday is a slower day because of especially in the afternoon, Europe afternoon, basically because of the US holiday. And Thursday is a big day because of the ECB press conference and the NFP. Oof, that's a huge one. Wednesday we have ADP. So Monday, Tuesday, Wednesday could be tradable. Tuesday, Wednesday the best. Monday, Thursday, Friday the most difficult. Roughly speaking. Let's take a look at the charts and see what's going on to see the bigger pictures here. Euro dollar inching forward, or upward I should say. Still the same basically as 5 days ago and 10 days ago and 15 days ago. Why do I say that? Because basically after this big pin bar here, after this big engulfing candle, this is day number 17 and we haven't broken the bottom or top of that daily candle. So it's quite extreme tight range for the euro dollar to have such a one candle basically engulf all the other future candles, 17 in a row. Basically 17 days here we've been bouncing about between 200 pips. It's extremely tight even for the euro dollar. Euro dollar is not a big mover as of late, but these 200 pips 17 days even for the euro dollar is quite extreme. Now, of course, eventually, one day we're going to break out. The question is when and where. It might take longer than we think because once the currency gets stuck in a range like that, it's not easy for it to actually pull out of that zone. So We're curious to see when that can happen. We're actually approaching resistance levels like 136.75 now, 136.50. So who knows? I'm not sure if we can push through it now or if we'll make another retracement. If you look at the weekly chart, you can see last week was a bullish candle and closed bullish as well, very near and close to the high of last week. So there is that bullish momentum if you look at that weekly candle, and therefore my bias is still bullish. Yes, prices is stubbornly basically choppy, but still, if you look at it, we had a pin bar, retracement of the pin bar, bullish candle, bullish candle. So although it's slow, it looks more like a bullish structure if I look at the weekly candle. So I wouldn't expect the break of last week's low, which is 135.75. Any dip down that stays above 135.75 is retracement territory for a bullish bounce, in my opinion. Just looking at his weekly candle. I know it's sideways roughly, but there is that bullish bias if you look at the weekly. On the daily, you can see why, because it's partly in this uptrend, right? If you look at this channel, connect the dots, connect the bottoms, connect the tops, and you have a weak upside. So, well, that could last. If it doesn't last, then this could be an impulse, correction impulse. But for that to happen, I really think that the break of the bottom is something I would need to see. Not that I would right away immediately go short, but that would make me more bearish in the intermediate future. For our chart, you can see rise, retracement, and slow crawl up. 1 hour chart. And here we're having some problems. You can see rejection wick here. Anytime we get into this zone, it's just very difficult for price to get its legs to the upside, and it finds retracements. Retracement, retracement, retracement. Right? So we'll have to see if we get one of those again, or if finally price can push through higher levels. You know, that's the thing that's a bit difficult. Although I'm bullish, I wouldn't say I want to be bullish right here, right now. Not in the current context. So what I would like to see is a break of 136.75, and then basically a pullback and continue. Or price retraces and we see a bounce from about 136, for instance. That's another way of doing it. But until one of those two things happens, I will be cautious with this euro dollar. Both the up and downside at its current spot. If it breaks 135.75, as I said, then I'm becoming more bearish. I will still have to seek a good spot for the entry. I'm not going to jump in right there. But if we get a pullback, maybe that could lean itself for some shorting, maybe. So those are the lines in the sand regarding the euro dollar. Let's take a look at the pound dollar. Pound dollar bounced off the 78.6 fib. Now I'm not sure if this is the end of the pound dollar upside or if we're going to get some follow through, and this is just actually going to be part of a bigger uptrend. So that remains to be seen. What I would really like to see for upside, because we are in a strong uptrend, is price to go above this 170.60. If it does that, it's looking more bullish. Now, if it doesn't, there is a chance that this upside is toast, and maybe if we break below this level, for instance, there is a chance that we could break out of this triangle to the downside. That would still be a heavily counter trend trade, obviously, because the trend is certainly up, but there is that chance we can make a fall back down to, for instance, this level and then bounce again to the upside. That would be a counter trend break, risky but possible. With the trend break, would break above 170.40 here, as I said, 170.60, and continue higher to what kind of targets? Well, first of all, 171, then 171.50. Those are the targets there to the upside. Then maybe even higher, up to 172, 172.50. You know, as we progress, those higher targets, of course, become available. Here you can see why it's an uptrend. Well, not so good maybe, but you have those uptrend lines, the blue ones here on both sides. You'll see it better on the daily chart. We had an uptrend, plus we had a very slow corrective downside. We weren't sure if that was a trend channel or if it was a bear flag, bull flag, I should say, excuse me. It was a bull flag, and we got the break of that, another bull flag and a break, and now we're getting a correction. So is it one of these corrections, and we'll get followed through to the upside, or will the correction expand itself, and then we'll get a break to the upside, or is it going to be reversal time? That's always a question. So far, it doesn't look like a reversal time, but who knows? Not for the moment, at least. It's a little more looking like a consolidation for more upside at the moment. We don't have any divergence actually between these tops, which means that the price is running at a sustainable rate at the moment. So I do think that the chance of this top breaking is a decent chance. The question is, will it happen from the 38.2 fib, or will we break sooner than that? That I think is the primary question. So it looks bullish and bearish on the dollar. Same like the euro dollar, in fact. Of course, does that mean it will happen? No. That's why I'm waiting for confirmations, things that can provide clues that what I'm analyzing is indeed so, and makes sense. But the lack of divergence on the 4-hour chart, certainly a bullish aspect of it. Now here you can see the daily chart, and you can see that channel to the upside. Very nice uptrend channel, isn't it? So that has lasted already since last year's summer, so it's been a while. 1 year, to be precise. There's still one more fib left. 1 second. Sorry about that. There it is, this channel. So it's a beautiful channel, and there's been a great uptrend. And every time we make these corrections, it's actually just pausing for more upside, as we can see. Look at that. And every time we had one of those retracements, upside, upside. Right? That's the rhythm of the market here in an uptrend like that. Up correction, etc. And it has lasted long. It's been a well-established uptrend channel. So now the question is, are we now pausing for one more move up, or are we going to get one of these bigger things? In my opinion, this week a break, or next week a break to the upside, is a decent chance, as I already said. Looking at that 4-hour world, the daily doesn't stop me from that conclusion. The only thing that is important on the weekly is the 170.40 level. That is a big resistance top. Now, obviously, we did push through it by about 170.40 is the actual resistance on the monthly chart, weekly chart. That is dating from January 2009, roughly, or let me take a look again. Yeah, sorry, August 2009. So it's about 5 years ago. So what happened at that point is a big level, because price hasn't been there obviously in 5 years. So this is a big top. Price did push through it, but only about 23 pips. So yeah, it's not a big break. It's some break, but it isn't a huge break. So that's something that could still be concerning for the bulls at the moment. Otherwise, really not much left. If you look at this particular angle, there would be, if once we break through that 170.40, there should be some good space, maybe for a breakout to the upside to challenge 180. Right? Price has been going up ever since this 148 bounce, so it's been going up for more than 2,000 pips now. And as long as this trend channel stays intact, there could be definitely additional mileage to the upside. And one thing that probably would be good is a break of this orange line and red line, and that we could see a pretty decent continuation up. Now, I'm not sure if we'll get to 180 necessarily. That of course is difficult to predict. There is space up to 180. Whether the currency will indeed move up to 180, who knows? We have to take it step by step. First targets, if it does break to the upside, as I said, is 171 and 171.50. Right? So we have to take it step by step. Aussie is in an uptrend, broke out that orange line. It's struggling here, though. It is. Can't deny it because look, every time it moves up, resistance, move up, resistance, move up, resistance. Difficult to avoid that scenario, as we can see, and we are maybe making a ascending wedge. Anyhow, whatever it is an uptrend, but it's facing resistance. And the question is, will price be able to push through that resistance? Sorry, or will it actually reverse? Obviously, this uptrend channel, the bottom of the uptrend channel, is a good indicator for potential reversal to the downside. The same holds true, of course, for the magenta and the red line. If that line breaks, then we could see a breakout to the upside. So, yes, I am waiting for one of those two to break. The other scenario would be if price does use the support for a bounce. That could be the other scenario. From this green bottom of the green line, we have the blue dot. A bounce there is possible. Here you can see those spikes up and down on the USD very clearly. Not a very choppy environment within this zone. 4-hour we do see the uptrend. Daily also choppy. 4-hour isn't a trend, but a daily we see it's choppy. Why? Because we had strong down, we had strong up, but now we're going. Where are we going? Sideways. Right? Look at this. Up, down, up, down, up, sideways. It's overall it's sideways. Weekly chart. Last week was a bullish candle, so in my opinion, anything that stays above last week's low, still a bit bullish territory. That's for sure. 93.50. Once 93.50 breaks, then it could be back into bearish mode. And we can see maybe some acceleration to the downside and retracement follow through next week or next month. This month is looking like a bullish candle so far, which means if it does close something like that next week, we can next month we can retrace part of that bullish candle. But normally speaking, the 92 low of this month will be something to keep an eye on because price should not break through it. Otherwise, it's looking bearish. If it stays above that, it's looking bullish. So 93.50 for this week, 92 for next month. Those are the bull lines. Other than that, really nothing to add. The magenta, the green line, and this green line. It's all about that. The green, magenta, and the trend line. And seeing if we can get a bounce here for that upside and eventually a break. Or will we see failure again and maybe a counter trend? I'm keeping an eye on these three things. The green, and the magenta. Otherwise, if I do look at price action, the bullish scenario is, I think, a bit more likely. Because to me, it still looks more like an ascending wedge. So unless price proves that it's different, I would still be more inclined to say there's a bullish potential. Just it's difficult for price to get above it. And it's just difficult for it to break those resistances. But if it retraces back to support, I think there's a decent chance of finding that bounce at those support levels. Let's see. Next one, dollar yen. Dollar yen, let's take a look first at the 4-hour, maybe the daily even. Daily chart, just a lot of chop. This entire year has been choppy. Quite funny because 2012 and 2013, 1.5 years, were very trendy, very powerful. But after the fall of this year, we've just seen consolidation. No follow through, and price is just not getting any, how do you say it, traction, and flat as can be. So within that flatness on the daily chart here, what you can see on the 4-hour chart and hourly, what could we say about it? Well, if I look at it from a wave perspective, it is looking like a potential bouncing spot to me. 78.65 got respected here, so I wouldn't be surprised to see some upside up to the minus 272 target myself. But if it does break below this bottom of 1080, then we could see price fall down to 100. And if it breaks below 100, and maybe further extensions. So that is possible. This bounce up to 10, these targets right there. From a wave perspective, that looks pretty likely. But who knows? We have to keep an eye on it. If it does bounce at these levels above 180. From a weekly perspective, let's take a look how price action is looking. Bearish last week. Monthly chart bearish too. But basically just going sideways. So the question is, has this completed 1, 2, 3, 4, 5 waves? And now we're going to be in a 3-wave correction for a long time, see big consolidation? Or are we going to see a follow through on that uptrend? If we do, we need to break above these resistances, and then we'll see that follow through. If we don't break above it, there is a chance we'll see a bigger correction, but then we have to break below 180. So those are the lines in the sand. A break above these tops, good to go to the upside. A break below the bottom, maybe some potential consolidation and retracement, continuation possible. Until we break one of those two, price could just continue going sideways like it has already the last 5 months. When this started, let me take a look. This pin bar was beginning February. So January we saw fall, but the rest of the 5 months we saw sideways move. There's really nothing else to share in my opinion. Besides the fact that price is consolidating, there is from a wave perspective a potential bouncing spot at these levels. And if we don't, we could break below this and see a fall. If we do break above the weekly top here, then we could see maybe a breakout. That's about it. XAU USD still hanging and going sideways. Why do I say hanging? Because it's just going flat. It had a big impulse, it had a big momentum, now it's going sideways. Alright, but because of that, it does look bullish. The impulsive move up, the lack of any movement to the downside, is looking like an impulse correction impulse. What could happen is that price could bounce off of this 38.2 fib. That's possible. It could retrace down to there, but then there should be a bounce. Either the 38.2 or later on maybe even from the 50. If it breaks below the 50, then things are looking different. I don't know why, but that we didn't get probably the follow through to the upside. So this is something to be cautious of. That the shorts are certainly not that appealing here, not in this environment. Now the longs, as I said, from this level to this level, or if we break above these tops, there's potential for upside as well. Probably maybe even to wait for a break above this level. The other scenario is that we bounce now, but that's a bit riskier because we can make that retracement down to the 38.2 fib, potentially. Maybe not, but it would be good to keep an eye on this chart. If we do see any bounce again off of this level here, there could be a third bounce from that level, and we might not get that deep. Daily chart is looking bullish, at least up to 1360, 1367. Looks like a double bottom plus move, correction, and now getting a spike up here. So at least that potential to retest this top is possible. If we break above that trend line, we could see further extensions to the upside. Maybe up to 1400, maybe up to 1430 even. Something like this. But if we break through the 50 fib, then there's potential for bearishness, especially if we break below 1240. Right? So this is the bull and bear line that I would say is useful for the XAU USD. Well, as always, if you have any questions, send it to me through the chat. But don't forget to send it to presenter so that I can see the chat. careful with today. It's the last day of the month, so let's take a look at the monthly chart here. That's looking bullish because it's engulfing actually the month of May. So that could be a sign of bullishness. However, of course, be aware that next month we could see retracement of this month before we see a bounce. That's why this bottom for the bulls are very important. 1240 price should not go below that if the bears or the bulls want to stay in control. So if it closes something like this, looks like engulfing twins, bullish. So a retracement and follow through, for instance, is something that could happen. For a bigger breakout, we really need price to go above this resistances here, and we could see further extensions. Well, thank you so much, everyone, for joining us today. As always, Monday at 8 a.m. UK time. We'll be back, I do believe, next week. Let me check my agenda. Yes, Monday, the 7th of July, so we can see what happened in the first week of July and how June officially ended as well. Although we're close, we still have an entire day of trading, so who knows how the month of June will really look like. We have to still wait for today to see. We can make those conclusions and then see what we could expect for July. That's Monday, 7th of July at 8 a.m. UK time as always. I thank you once again for spending your time here in this today's webinar. If you want to get the recording, take a look maybe a second time, blog.binary.com/weeklytradingroom, and you'll get an email when the recording is available. Wish you all great trading, a great week ahead, and see you soon. Cheers.